Welcome, ladies and gentlemen. Jim here. How are you guys doing today? Hope you guys are doing well. At least I'm doing well. I want to keep this video to the point and short, but educational, inspirational. So we're gonna talk about the FOMC, how interest rate normally affect the market, and quantitative easing as well. Let me check who we have here in the chat. Who is here with me? And I'm more than happy, as always, to um, share my screen with you. Before we continue, we are very active with trading. Recently, making really good, results. We swing, we scalping all day long. We have VC Richfield, we have JustBit, we have me, J Trader, and all those other guys. Um, August was a really good month. September has treated us good as well. So I would say give it a try. Go and check the Nest Club and the Burbicator Pro, and you might get this for a special discount. Now, let me check my screen. And by the way, later I will show you the different trades we have played. But now, I'm going to share my entire screen. Look. We have here ADC. How are you doing, my brother? We have here my brother from Jamaica. How are you doing, my brother? And we have here the one and only Wood Shop, my brother. Really nice to see you here. Let me know if you can see currently my screen. You should see my screen. Wait. Yeah. Let me know, guys. I'm sharing if now the crypto heat map with a lot of blood, a lot of red. Let me know if you guys can see this. I think I'm back. Now I want to share my screen. Voila. I bet you guys can see the screen at the moment. This is, you can see this, this crypto heat maps, you can find them everywhere, including on our website. But there's one little thing you will not be able to find on any website, and that is this very specific crypto breadth chart. What it does is it's measuring the declining and advancing crypto assets on Binance, and it's mainly focusing on the USDT pairs. Why is this so beneficial information? Well, it tells us here that almost 4% is trading above their 200 MA. 4%, meaning 96% is trading below their 200 MA. And then we have the 50 MA. We might have seen like recently, uptick here, but still at the moment as we speak, 32% of all Binance pairs, USDT pairs, are trading below, 33% are trading above their 50 MA, meaning 68% are trading below. Here it tells me that some coins, or many of them, they have risen, meaning they reclaimed the 20 MA. So as we speak, around 43% are trading above the 20 MA. You can check this on a daily basis every day, and of course you can check here as well. This is, by the way, my time zone, local time zone. It adjusts automatically. The FOMC announcement will come very, very, very soon. 8 o'clock my time, 6 o'clock UTC time. Yeah, great, guys. That you guys can see my screen. So this interest rate announcement will have big implications. Maybe not so much on the short term. Happy to share my thoughts on that. But long term, it will definitely have major effect on the market, especially on Bitcoin, because I still see Bitcoin as a very hungry sponge. And this very hungry sponge wants to soak up and absorb all the liquidity that's there, especially in an environment where the interest rate is very low. I prepared a few slides, and then I want to deep dive with you guys into the charts, if you don't mind. Yeah, you should be able now to see my screen. Wait. How do I do this without... Wait. Yeah, I trust you guys can see this, and no, I should have prepared this in advance. But anyways, I'm gonna trust you guys see this. So why I'm sharing this? I want you guys have a little bit better understanding of the interest rates and quantitative easing. To get like the full picture why this is interesting for risk-on assets. So the one thing we should understand is there is a correlation between bond prices and interest rates. And what's the correlation? It's an inverse correlation. So when the bond prices are going up, or actually I should say when the interest rates are going down, bond prices are going up, and the other way around. And I'm happy to illustrate this by quickly sharing this. So this is the 7 and 10-year Treasury bonds and ETF. You can find this on TradingView. It's the blue line here. And whenever you see that this is the monthly chart, by the way. Whenever you see that the interest rate is going up, the bond price are going. This is the interest rate. Sorry, the red line. When the interest rates are going down, bond prices are going up, but also the other way around. So this here was increasing the interest rates. So it's on this banner, 5.5% at the moment. When this was going up, this was basically going down as well. So there is an inverse relationship. And maybe next time I would love to deep dive into this a little bit more, and also about intermarket relationship between bonds and stocks, because normally the rule of thumb is first bonds, they will move, and then stocks normally. So what is this actually all about? Lowering interest rates. I'm not going to make it really dull. I just want to quickly go through these few slides, and then we're going to deep dive into the charts. So it's very easy. The definition, it's actually reducing the short-term interest rate that central banks charge commercial banks for overnight loans. And why? Well, it's actually to encourage spending and investment. It's, money is getting cheaper. And what are the direct effects normally? Well, cheaper loans, obviously, duh, because lower interest rates, lower mortgage rates, reduced interpayments for on existing debts, and which can normally, what I hope is it would boost consumer spending and business investment. Quantitative easing is something a little bit something different, although they're related to each other. It's actually a monetary policy where a central bank buys long-term securities, such as government bonds. And what it actually does is it's actually injecting liquidity into the financial markets. And this has an effect. So I hope you guys are still with me. So quantitative easing is a policy where central banks buy long-term securities, such as government bonds, securities, all of that from the open market. So what actually is happening there is they're actually injecting liquidity into a financial system, and this has again effects, especially on risk on assets like stocks, but it could also be commodities, but it could also be crypto indices, and they often respond normally positive, not per se on day one of rate cuts, because lower interest rates can, as we know, reduce borrowing costs for companies. But the bottom line is lower rates also generally encourage investors, and this is really important, to shift from bonds to equities in search of high returns. Because a bond is really safe, you can get a really nice yield, as we can see here on Trading View. Where is it? These are the yields you can get, and they are actually not bad for such an investment. This is basically guaranteed free money. Maybe you don't beat inflation, but still it's pretty damn safe. The likelihood that the U.S. government goes bankruptcy is extremely small. So having a lot of money in bonds, especially when the interest rates are high, does makes absolutely sense. But it also makes sense that when the interest rates are going down, and let me check if the interest rates are going down, then this will encourage that type of investors to shift from bonds. And there's a lot of money, trillions and trillions of money in these bonds, and it will shift into equities in search of high returns. So that's actually the whole thinking process of this, of the interest rates. We talked about this today very briefly on Discord. But I think even if you are an investor and only focused on crypto, still bonds are extremely important, and still having a basic understanding of interest rates is also extremely important. So now, lower interest rate makes equities more attractive to bonds. That's the whole. That's actually probably the only thing you need to remember. Lower interest rate makes equities more attractive to bonds. And now my foundational belief is, I still believe that Bitcoin is a liquidity sponge. It can absorb a lot of liquidity, as we have seen previously. It was sitting on a 1 trillion market cap not so long time ago. I think this might even go to 2 or 3 or 4 trillion. Nobody knows, of course. These are just speculations, but we have seen it previously that Bitcoin has the ability to absorb a lot of financial resources, money. I'm going to close this one. Hope this makes a little bit of sense. If it doesn't, let me know. If it absolutely makes sense, let me know as well. Any questions about this? Happy to go through them. And now, the talk of the town in the recent weeks was the inverted yield curve that's stabilizing. Very quickly, we're gonna do this very quickly. So these gray marks you see here, they're actually marking a recession. So we had a recession, we had here a recession, 2001, 2008. I was still a student at that time, long time ago. We had here a recession, and now this always after a inverted yield curve. So what does it actually mean? It means that um, it's actually an unhealthy situation where short-term bonds or treasuries are making more yield than long-term. Actually, you would expect that long-term bonds would give you more yield, but if it is the other way around, it um, it often marks a recession. And again, I'm not a CFA, I'm not a financial guru. I'm just trying to tackle this from a TA market analysis perspective. But always when we had like this normalization of the yield curve, it takes some time before a real recession kicks in. This is something we talked about in our Discord. I'm going to make it a little bit bigger so guys can see this a little bit better. Here it is. Look. Let's go from the recession starting from 2000. So we had here we had a recession, as you also guys have seen in that previous chart, and it took us like from the moment of normalization, so when it was inverted and then it normalized, so it was not inverted anymore. It took us around 6 up to 9 months before a real recession happened, and here more or less the same thing. In the pandemic recession, we had a 3 up to 6 months kind of lead time, the moment from normalization to the actual recession. So I believe if this would lead, and of course this time could be different, but if this time is not different, and I tend to believe this time is not different because it has some accurate predictive power, looking into the inverted yield curve, then this might take 6, maybe even up to 12 months before we see a recession. um, this was extremely inverted for a long time, so it might be possible that like the lead time to a recession, of course it could be like a soft recession, I don't know, um, it could take longer than normally. Thank you, Imran, for your very kind words. Now let's dive into the charts because that's what matters the most. I'm not gonna lie, sometimes I'm also suffering from analyst paralysis. There's so much going on, to such an extent that today or yesterday, after a call I shared here on Discord, where was it? Um, I closed this trade yesterday around 9 o'clock my time, PM. I shared this trade setup, which did pretty well, but I decided that that trade was my last trade, and not gonna open new trades since we gonna have later FOMC. I'm not gonna lie, I don't have a real edge for playing these high volatility environments. I also don't have a clue what will happen today, later. However, what I do have is I have some clues and ideas. So one is today's a big happening, especially if they actually going to announce the rate cuts. 25% or 25 or 50 basic points. I believe this will not have a major immediate impact, as in, because of this small cut, I don't believe that all that money that's sitting in bonds, those investors, that they think, oh, you know what, I'm gonna invest right now today after this announcement in equities. I don't believe this. However, I do believe that in the long run, and it's also what I shared here, lowest interest rates will eventually push big institutions, so those who are have who have invested in these bonds, they will they will feel more the urge to look into more risk on assets. It could be gold, it could be silver, it could be metals, it could be crypto, it could be it could be basically anything. But I don't believe just because it goes down with 50 points or 25 points, even 75 points, I don't believe that would make a huge big difference. So this will take some time, as we also can see here. These things really take time before we actually feel that effect and impact, as it is a non-binary event. So enough about interest rates, enough about that. Let's check what Bitcoin is doing. All right. No, I'm not going to discuss the monthly chart. By the way, there is one little thing I would love to share with you guys on the weekly. I consider this like gray box as a support zone. So guys, normally I do clean my chart before I go live. Sometimes not. I should do this more often, right? To not waste your valuable time. Some people, they might, argue that okay, Bitcoin is making lower highs and lower lows. But I believe this might be true, like technically, right? But like from a context perspective, this is still a range. This is still a range, and today we are how many days post halving? Today we are. Let me go down to the daily to make it more even precise. 151 days. This is 151 days post halving. I'm shared this, many times with you guys. I might repeat myself, but often when we see in halving event uh, as this one, normally it takes Bitcoin a long time to consolidate before it actually makes a real move. Here it took us 161 days. And the other halving, which doesn't appear here because it was really long time ago, too long time ago for Binance. The second halving, it had a similar behavior, a consolidation of more or less 160, 170 days before real decisive move happened. And I believe this time is not really that much different. Um, I think we're still in that phase where Bitcoin is just doing what it normally does, being very boring. And post halving, especially the first 160, 180 days, they are supposed to be very, very, very boring. I believe some time capitulation is going on right now. A lot of people who entered Bitcoin, they're actually giving up on Bitcoin, which I do understand that. It's not we people, we hate, actually, from a psychology perspective, we hate uncertainty. We are not that we're okay with dealing um, with long duration. But if there is long duration and uncertainty, we don't like that. Our human, mind, our brain does not like that. And there's a lot of uncertainty at the moment. However, if I zoom out, I do see a clear picture. And that clear picture tells me the primary trend is actually still up, although this is a, uh, you know, although it does make like slightly like lower lows and lower highs, it's still a consolidation phase, in my opinion. However, if the market really responds very negative to the rate cuts today, it's really simple. I just from this swing low, I anchor the volume profile, and these are basically here my the breakdown levels. So here around 50K possible, and then we have here around 40 for let's say 40K. We can also see this big gap here. So normally, like, the rule of thumb is when you see such a low volume, price can quickly travel through that low volume node, as it was proven previously that there was not much of an interest to buy Bitcoin at that time. However, if Bitcoin can reclaim, especially this level here, which I also shared yesterday, I'm going to clean up my chart immediately. I believe this is a very obvious, maybe the 1-day chart. SNL level, it interacted here quite, it was quite responsive to this level here. As we can see, all these bounces, the rejections, the rejection here, the very recent rejection, again, confirms that this level is a pretty important level. I believe if it can reclaim this level, the path of least resistance, in my opinion, is 64K and then eventually 67K. So I would approach this, level to level. Again, I have no idea how the S&P will react to today's announcement. I prepared a chart with also gold. This is gold. What I'm seeing is it's gold making all-time high, very beautiful. While Bitcoin is still lagging. But I do see some warning signals. Actually, I see this massive rising wedge, and on top of that, I see this bearish divergence. And if we add the Brigator Pro to this, 50% is enough. We do see divergence here and divergence here. Like, this is the typical Brigator Pro divergence. If this RSI is curling down and taking out this low here, then I would say that bearish divergence is going to play out. Of course, it could make like a new higher low. I don't know, but this signals, in my opinion, a warning sign, to say the least. Of course, I don't want to fight the trend. I'm not also trading gold at all, just using checking gold often from a from the perspective of what's the risk appetite and how metals are performing. This is the weekly chart on the S&P. S&P made a beautiful all-time high, but I cannot ignore this you guys can see this bearish divergence, and this is just not a bearish divergence. This is actually a divergence on the weekly chart. You can even draw like a divergence like this, because in essence, what it's actually telling us is this is going low and this is going high, right? And they are diverging. You don't per se need a straight line to draw a divergence. Oh wait, yeah, I want to hide this one. Oh, yeah. So yeah, we could see like a new all-time high, and it can break through this bearish divergence, but it looks kind of toppy, heavy to me. It's also quite funny, right? The S&P made an all-time high while the interest rates is also at a very high point. Yeah. That's a good question. Why are bonds inverse with interest rates? Can you give an 190 LDR? Newly issued bonds, they will increase in price, and because they increase in price, the 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 yield will go down as well, because there is also a inverse relationship between those two. I think I prepared a wait, it's here. Uh, I will dedicate like an specific um, educational video for that. But here you can also obviously see that this, like the 20-year treasury, is going down in price. In price, however, the yield is going up. Correlation coefficient. Bonds. 20 years, I said, right? Yeah, 20 years. Oh, man, sometimes I'm too quick with these fingers. So this is the correlation coefficient. Zero, it means no correlation. Plus one, like actually like normal one, like plus one, actually tells you there is a very strong correlationship. The closer you get to one, minus one, minus one actually represents extreme inverse correlationship. Here it's this is basically 0.86 minus 0.86. This suggests a very strong inverse correlationship between the yield of this specific bond and the bond price. Hope this makes a little bit of sense. This was part of my CMT curriculum. Again, I'm not like a CFA guru or a bond guru, but I do believe that having a basic understanding of this definitely will help you with, especially with your investment thesis. Yeah, to circle back to Bitcoin. Where is my chart? I think we already discussed like the breakout levels, the breakdown levels. Me personally, we both Bitcoin, when we celebrated the best times now, it's once in the year we do a trading event where we celebrate such an event in a trading event. The theme in 2023 was the best times now. or in 2020. I cannot even recall. But I believe that if I believe that the path of least resistance for Bitcoin in the next 6 months is more positive than negative. Short term, I really don't see Bitcoin that quickly going to 42K as so many people claim. I see levels. I would say play this level to level. 54.5K is a level. Around 51K is a level. Around 44K, that's a level as well. But we cannot, predict or anticipate 44K just because it's getting or because it's rejecting here. If I see if this goes down and re-enters this zone, and ideally it takes out this low, I will be worried if it would take out this low, unless it's a very quick wick, but ideally not. If it takes out this low and it gives me like another kind of swing failure pattern, then I would be happy to find new longs here with size. Only if that happens. For now, yesterday I opened a trade, but that was a really low time frame trade. I don't see many good setups as of now. This is really thin. It can break this level that very easily. The level very interesting to me would be like this level. I want to see if Bitcoin goes to this level after the FOMC, and I see some. I should do this. This makes more sense. Or even taking out this low here and going like making some kind of swing failure pattern here. I would be happy to look for longs, but only after the FOMC. I would let the market digest the information before I'm gonna make any move. Otherwise, the market's going to digest me. Any questions, ladies and gentlemen? I've been talking already for 38 minutes. We can do alts as well. Yesterday, we've been talking about Thea. Thea is definitely on my radar for a few reasons. I see this massive falling wedge. No. While Thea is showcasing a really strong bullish divergence. Right, I should make this one. As you can see here and here. And sorry for me so being so messy. Long day. What is this, by the way, on logarithmic? Yep. So this is basically my thesis. Thea, massive falling wedge, massive bullish divergence. What's Fabricator Pro saying? Yeah, doesn't really recognize the big divergences on other oscillators. Could draw it like this as well. But it's re-entering this falling wedge. So anything around $4, if we get there, even 4.5 would be quite interesting for a potential long. And ideally, what I would love to see is making like another dive. Oopsie, dive. No, I overshoot. If it makes a triple divergence. Where is it? So the price going lower. While this bad boy here on the RSI would give us something like this. But too early to anticipate. I just need to wait after today. STC. You mean Sidechain? But is this the chart of Sidechain? Yeah, just like many other. Is this the one? Yeah, I guess so. This is the one. This is an extreme long wick. Well, of course, this is no volume here. Honestly, I wouldn't. I have a back, to be honest. On BNB. Still waiting for their card. Yeah, look, I would say this is just a very obvious support level. I want to find out what happened here this long week, Sunday. Massive dump probably will. I don't know. I don't see like a really favorable long setup as of now. But at this point, I would rather go long than short. Selling here wouldn't make sense at all here at support. Hope this helps a little bit. Volume area? You mean? I go by the default. You mean the? Let me go. You mean this, right? The value area. I rather go for 70%. Or the reason is like most people are using this. I haven't tried 40%, to be honest. I haven't played with that. I also don't see a really good case for myself to try out 70. But hey, if it works for you, then it works for you. And if you find more benefits by adjusting the value area to 40, let me let me know. Happy to expand my own knowledge. Okay, ladies and gentlemen, I would say let's call this a call. Let's call this a live stream. Thank you so much for the questions. Really good questions, also about bonds and about the inverse correlationship. I will go next time a little bit deeper into this. The only thing you need to remember for today is this: Bitcoin liquidity sponge, a very big liquidity sponge. Quantitative easing, it means injection to the financial system, lowering the interest rates. So, cutting the interest rates, long-term positive effect, as mainly because my main reasoning is it will encourage bond investors to shift from bonds into equities. And this could drive the stock prices up, but also crypto, because crypto is still pretty much correlated with the stock market. So this is basically the TLDR. Lower interest rates generally encourage investors to shift from bonds to equities. Um, Thank you very much. And also, Bernd, if that 40%, I would say try this out. Try out where you have used 70% and then see how it was different. See how it is different against 40%. If it gives you better signals, um, I don't per se use the volume profile as a signal, more as a confluence, especially with low volume nodes. They can act pretty good um, as a support, especially in combination with a swing failure pattern. But yeah, I would say with TA, you just just throw everything at the wall, at the wall. I'm not sure what it is. You just throw everything, and then you will find out what sticks and what doesn't stick. Oh shoot, my mic sucks. Wait, nobody leaves. Seriously, does my mic sucks? I haven't, because if this is the case, if my mic sucks, why haven't you told me that before? Using a pretty good Rode microphone. By the way, guys, if you think the quality was not really good, let me know, because then I might need to buy myself a new microphone. Only the best for you. Okay, cool. Okay, guys, see you. No, because yeah, maybe it's your connection. Who was it again? Come on, man. Come on, my man. Link. Okay, we can do link. Now maybe sometimes it's maybe too far away from the microphone. Let me do link. I haven't charted link for a while. The last time was last week. Okay, the link is quite interesting. This is funny. Here I both link. This is like an anchor tweet in 2023, uh, when we had there was like an event going on in Berlin. And the funny thing is, like, this is a typical string failure pattern. You can see it breaks through support, induces a lot of fear because people think, oh shit, it broke this multi-month, multi-year support level, and then it resumes to the upside. Very funny, classic, very classic. But we're not talking about the past. We're actually talking about like the most recent price action. Look, when I said Bitcoin was making lower lows and lower highs, but no, not really that significant. That's true, but I cannot say the same thing about Link. This is a very clear, obvious downtrend, a very, 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 very clear one, as many alts have been suffering since March, and Bitcoin has been outperforming. I mean, Bitcoin is just 35% away from its all-time high. Many of these other alts are probably 80% away from from their all-time high. Mm, no. So when would I be interested in Link? If I want to scale into Link, it's in this green zone. This was a multi-year consolidation phase. 520 days. 520 days. That's a lot of months consolidating here. So how I see this is this is a very strong base, as it acted for a long time as a very strong resistance level. We can see here this was a fear-induced movement, a very long week, quickly went up. We could get back to this level like 880, $9 ish. Um, that could be a very interesting level for Link if you believe it has from fundamental perspective, that it has a the potential to accelerate. But for now, this is a confirmed weakness. This is like weakness upon weakness here. Let me do the anchored volume profile from here. Away from the value area. No, it wouldn't be that. I would wait. As guys can see, I've set my alerts here. You see, gonna maybe move it a little bit up. Only then I would be very interested in link. And ideally, we see something like this, like a long wick or some price action just below this gray zone, forming a swing failure pattern. Ideally, some bullish divergence on the daily or the 12-hour chart. Then I might approach this as a trade, not so much as adding this to my portfolio. Okay, guys. So that was Link. Hope I clarified. Maybe what helps is also when you do a chart request, mention the time, not the time zone, the time frame. Another way to see this is a head and shoulder pattern playing out. Okay, maybe some of you guys are not a fan of it. It doesn't always play out, but when it does, it does. I would love to, for all my Link Marines, I would love to see Link back here and then retesting this level and then going up. I think as a trade, I would love to enter around 880-ish. And then even if it is a bearish retest here, it still provides you a decent setup. Look. Imagine it goes here. You would at your stop loss here. Aiming for this as for a trade, it's like a 3.8 trade. Yeah, could be interesting. Okay, guys. Until the next time, see you around. As you guys know, there is also Discord where I share also low time frame trades. We share swings, scalps. I'm very active also with trading psychology content. I recently shared I did a dedicated members only video on ego and trading performance. I do this quite often, sharing these write-ups and videos. Eventually, trading is all about mindset. If you are in Discord, go and read this: ego and trading, understanding the psychology behind decision making. TLDR, the ego is not per se bad or good. However, it's trying to establish always your self-image, and even if this leads to poor trading decisions. I also share this quick, cheat sheet, the 5 ego questions. Whenever you're in a trade, ask yourself, am I focused on proving my analysis right? Is ego leading it, or is it initiated from a trusted strategy? Am I emotionally attached to the outcome of this trade? What I know from a lot of people, and I talked to a lot of people, is their self-esteem is attached to their trading performance, and this is very wrong. And a loss should not affect your self-esteem, but also a win shouldn't affect your self-esteem. If I'm in a winning trade, it's nice. I do feel some pleasure if other people will benefit from it, but it doesn't do much because it's just one individual trade. If I'm in a losing trade, it doesn't affect my self-esteem at all. So this is maybe like a quick, very quick trading psychology content for you guys.